Hello, how do you do? My name is Trevor Polischuk, and I am one of the portfolio managers for the Worldwide Healthcare Trust. In today's video, I'm going to give you an update on that trust pandemic version. We will discuss a host of topics today. First and foremost, we're going to discuss OrbiMed and how things are going out of our New York offices. I'm going to give you a little flavor of our pandemic playbook and how we responded to the COVID-19 outbreak in March and April. I will then update you on the healthcare industry's response to the COVID-19 pandemic. I'll give you a little bit of an outlook on healthcare and our thoughts both near term and long term and the outlook for healthcare, and conclude with a little bit of a performance update for Worldwide Healthcare Trust. So first of all, OrbiMed update. I think the take-home message here on this particular slide is that operationally, our move to work from home has been almost seamless. At the recording of this video, I am now week 10 working from home, but we've been utilizing technology as an organization to maintain our real-time communication, utilizing, of course, things like email, but Zoom conference technology like this video production, using things like Slack, and work from home, office phones. Our communication as a team has been almost flawless. From a trading perspective, our trading team has been trading globally and operational 24/7 for decades now. So again, another seamless transition to be able to work from home for OrbiMed. And our personnel, we're safe, no reports of positive tests despite our New York location. And what I'm very proud of, all parts of the organization are participating in the function of the firm. Finance, compliance, legal, administrative, human resources, investor relations, of course, the public team, the private team, the royalty team, and the trading team, all working together despite being from home. And in fact, not only have we not had any layoffs, we are actively hiring. Our pandemic playbook for March and April 2020. If you recall, the market volatility during March was severe. We were very near-term focused. The news flow was constant. Volatility spiked, correlation was high. We tried to exercise patience during that time, while others might have been panicking with some of the sales that we saw then. Obviously, healthcare was a clear focus. One of the things that we were not doing in the immediate component of the pandemic outbreak was chasing the next cure, treatment, or vaccine. There was some positive impacts on the portfolio from some COVID-related plays, but that was not our playbook per se. And there's some companies listed on the slide that certainly benefited, like CanSino, a Chinese company, leader in vaccines, has a COVID-19 vaccine under development. Of course, Gilead with remdesivir has been in the news quite a bit. We were involved there. Chugai, Regeneron. These were all tailwinds that we experienced in the portfolio, not intentionally, but because these were good companies that had otherwise solid fundamentals. What did we do towards the end of March? We were looking for those extreme dislocations. We sort of dusted off our playbook from December 2018, the last time we saw a severe market dislocation. We try to focus the portfolio on our best ideas, reduce the name count wherever possible, just try and increase the quality of the portfolio overall. Perhaps prune some names, though, that might be more materially disrupted because of the pandemic. So what did we do during that particular time? Well, we added to large cap pharmaceuticals, in part due to the changing political landscape, but also in part due to the pandemic landscape. We added in large cap biotechs as well. These are a little bit more safer names than some particular other subsectors. But we also did add to emerging biotech names. There were some severe sell-offs in March in some of these names, and we were opportunistic to add to them. In services, again, some extreme sell-offs in services name, in particular hospitals. Long-term, we saw value. We added some there. What are some of the things that we sold or rotated out of? Well, a lot of profit taking, for example. Life science tools, a lot of the diagnostic companies, definitely a tailwind related to COVID-19 and all the required testing, took some profits there. Medical devices, this is one of those sectors that will be long-term impacted in terms of material disruption to their business flow, especially those orthopedic names. And so we reduced exposure there. In Japan, two different trades. One was Takeda. We came into the year with a very large exposure. We just simply reduced the size of it, really pre-pandemic. Chugai was one of the beneficiaries of pandemic news. We took some profits there. We also reduced our exposure in CanSino, another pandemic name. But overall, 1,000 basis point swing for us throughout the quarter, which was extremely large trading volume for us. Well, what has the industry done? This is a very important slide. It almost changes every day, and I hope you can see all of it. But what's really incredible, in less than 3 months, there's been over 1,000 clinical trials registered on clinicaltrials.gov across diagnostics, vaccines, and therapeutics. For diagnostics, I can't keep up with the slide. Now we have over 80 approvals of new FDA-approved tests for the diagnostics industry, both molecular tests and serological tests, testing patients for the antibody to see if they've been exposed to COVID-19. Vaccines, it's incredible. There's over 100 vaccine programs already underway across industry and in collaboration with academics. These are already in clinical trials. We expect a lot of news flow out of vaccines between now and year end. It could be very encouraging. But therapeutics, I think this is probably the most exciting area. We've already seen positive data from Gilead's remdesivir, which reduces the severity of symptoms in patients infected with COVID-19, basically either getting them off a ventilator or getting them out of the ICU or getting them out of the hospital earlier. I think we see a number of different approaches coming forward. More antivirals, some anti-inflammatory drugs that will work, plasma-derived therapies such as Takeda's business, which is harvesting antibodies out of patients' blood who've been already infected and recovered from COVID-19. And then there's also the generation of antibody therapy itself, which could be also a promising therapy for the treatment of patients with COVID-19, or even offer a degree of prophylaxis. That would be a big deal. So outlook for healthcare. Well, first of all, near term. It's been really incredible, but the shift in the overhang, I think, has been dramatic. First, the headwinds have diminished, and I think the tailwinds have increased, partially because of COVID-19. First of all, industry perception. You know, the biopharma or healthcare industry is no longer like big tobacco or big oil. You know, historically, unfortunately, and quite frustratingly, I think the industry's reputation has been more profits over patients. But the collective response, as I detailed in the previous slide, of the industry in support of workers, healthcare professionals, drug manufacturers, has changed that whole perception. Even President Trump himself has moved from bashing the industry to praising it almost daily in his White House press conferences. I think this is a big shift in the climate for healthcare globally. Politics. A big event happened at the beginning of March, in addition to the global pandemic of COVID-19, but Super Tuesday occurred. This altered dramatically the Democratic nomination process, where we saw Bernie Sanders fade and lose to Joe Biden over Super Tuesday. And this decisive win, I think, was a pivotal and seminal moment in the US election cycle, which will culminate in election November in 2020 later this year. So now it really comes down to Trump and Biden. And the importance of this is that we feel that if either of these individuals is elected, it will be mostly status quo for healthcare. The possibility of having Medicare for all has essentially gone down to zero. I think this is an important, almost all clear horn for healthcare going forward. What else has changed? Well, I think drug pricing proposals, this has been in the news for the last 2 election cycles. It's been going on for years. But now, given COVID-19 and the industry's response to this pandemic outbreak, the next president of the United States, whether it be Trump or Biden, Republican or Democrat, they're going to be hard pressed to be able to back significant drug price reform in the face of the industry's investment in thwarting this pandemic. So maybe something will become either slightly before or slightly after the election, but overall we expect that to be benign. So there will be no sea change in terms of drug pricing in the US going forward. And finally, the economy. While we've seen a rapid V-shaped recovery in the stock market, I don't think many are thinking that way in terms of the economy, or at least it's open for debate. So what does that mean for healthcare? Well, certainly in a recessionary time, healthcare has proved to be defensive in the past. We think that'll be even more true today. If we look at the factors impacting the economy, do they impact a lot of the large healthcare companies that we're investing in? The answer is, quite frankly, no. Through the first quarter reporting period, we've seen no supply chain issues, no manufacturing issues, importantly, no demand issues for drugs. In fact, maybe there's been a little bit of an increase, albeit transient. The FDA is still very active. There's been some clinical trial disruption, primarily on new clinical starts, but otherwise the process is moving forward. I was very encouraged by how stable the earnings were through 1Q. Guidance was affirmed across the therapeutic space. And importantly, a lot of these big companies have very secure dividends as the cash flow remains strong through this period. So it's almost business as usual for a lot of the healthcare industry, and we think that'll bode well for it going forward for the rest of this year. Longer term, what are we focused on in healthcare? Well, certainly M&A. It's a constant theme in healthcare. It dwindled and slowed down a little bit in the second half of 2018, inflected in 2019. It slowed and dwindled a little bit during the pandemic. We expect another inflection with M&A beginning here in the middle of this year and continuing in the second half. And we've already heard many anecdotal reports around a number of bargains in the biotech space, which for us is really the sweet spot in healthcare M&A. The FDA, well, this graph, I think, speaks volumes. It's a simple graph, but what it shows is that the FDA set a record number of approvals in 2017, again in 2018, and the second most number of approvals in 2019. Effectively, it's been the most productive period in terms of new drug approvals in the history of the FDA. And while there might be a little bit of issues in terms of slowdown through this pandemic period, we've been so far very impressed with the work from home ability of the FDA. So far, most PDUFAs or drug action dates are being met, and the approval process is going forward. Like I mentioned, perhaps some slowdown in clinical trials, but I think the industry is very adept at stick handling through that and adopting new policies for clinical trials, more virtual access, and also focusing on geographies in which the pandemic is less severe from a breakout perspective. But the most important, I think, factor for healthcare for us, and this has been our theme over the last 5 years, is quite frankly, innovation. It's still the driver for the industry, and we're in a golden era of innovation. There's so many new and novel platforms that are creating druggable targets and pointing to disease states that never had any therapies before. And it's such a robust and platform-filled technology opportunity, from gene therapies, cell therapies. We're ushering in a new era of antibodies. Antibodies have been around as drugs for 20 years, but now we have antibody-drug conjugates, which is an antibody attached to a cytotoxin, which can deliver it to a tumor cell and drop off that payload, sort of like a ninja. Bispecific antibodies, antibodies that can target two things at once. Immunotherapy, commercially, is one of the most successful class of drugs ever. Advances in immunology, diabetes, protein modulation, targeted therapies are making a comeback. It's really incredible how much innovation is in the industry right now. This particular slide shows a handful of products that were approved just last year. And each of these products, in our opinion, has blockbuster potential. In fact, mega blockbuster potential. Drugs that can sell multiples of billions of dollars per year on an annual basis. It's really quite incredible. And this, to me, is the key driver of the industry going forward. A few comments now on performance. Fiscal year 2019 that ended in March, we were able to put that in the books. You can see here both positive absolute return and also positive relative return as well in the fiscal year. And then importantly, extremely strong start to fiscal year 2020. That's this column right here. The playbook that we set up in March really worked well for April. This is effectively what these numbers show. You can see strong double-digit absolute return and nearly 300 basis points excess return versus the benchmark. And then look at the incredible excess return versus the broader market as evidenced by the FTSE All-Share. Really incredible performance. I think this slide shows things a little bit more dramatically. The double blue lines, which I might be hiding with my picture, shows the incredible excess return over the benchmark in red and over the FTSE in purple. This slide is since inception. We're very proud to be celebrating our 25th anniversary of managing the Worldwide Healthcare Trust and the incredible performance over that time. And I think one of the most important things that this slide shows is that whether you pick us or another avenue to invest in healthcare, investing in healthcare is critical for performance relative to the broader market, especially over the last 5 years where we've seen this explosion of innovation, driving values higher, driving revenues and earnings higher across the industry, and seeing aggressive M&A during that period of time. Again, I think this slide speaks for itself. So in summary, what are we doing now? Well, it's back to the basics. We're certainly monitoring the pandemic and looking at infection curves, the impact to the economy, and will there be a second wave of outbreak? We're monitoring all of the trials for COVID-19, looking for some of those next therapeutic breakthroughs, when we can have a vaccine, and the progress in diagnostics. But importantly, on the portfolio, near term, politics have clearly shifted from a headwind to a tailwind. I think drug pricing concerns have totally abated, and the industry image has certainly been polished. The sector has gone from out of favor in 2019, where it was a laggard in the S&P, to completely in favor in 2020. And that's not even counting the innovation cycle that I think is a current boom right now. The FDA has continued to operate with only minimal disruptions, which is a very positive sign. And the financial impact from COVID-19 for the therapeutic companies has so far been nil. In fact, if anything, it's been positive to numbers. And like I mentioned, we also expect M&A to resume in the second half of 2020 and beyond. Long-term, secular demand for healthcare continues to accelerate. The FDA remains very pharma-friendly with record-setting new drug approvals, innovation as at an all-time high, and new product flow in terms of new drug approvals has never been better than it is now. With that, I want to thank you for your time and watching this video, this special pandemic version of the Worldwide Healthcare Trust as we celebrate our 25th anniversary in managing the trust.